Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. I hope nobody caught FOMO because as you guys know, FOMO is a no-no. Big gap down and it looks like the dip buyers, they took it as an opportunity to push the market up. They took it as an opportunity maybe to take a position. I wrote here in the Discord in my first post of the day at 9:26 a.m. this morning. I have next support at 593.5. If it fails, more downside is possible with 592 and 590 in play. To get a bounce going, 595 and 596.3. I meant to put 0.5. But 596.3 must clear to put 598 and 600 in play. Watch for the next setup and react unbiasedly. We usually use the 15-minute chart. And as soon as it's load, there you go. You guys can see here, the SPY opened on the 9:30 candle around 594.82. Cleared 595. Cleared 596.5. Started off the morning pretty strong, going up as high as 599.68, just shy of my 600 level. But after that, that's when it got a little more complicating. Had a 598 level. False breakout setup. I'm thinking, okay, well, it looks like we're going to reverse here. It was only good for a level-to-level move, as you guys can see, when we broke down 598 and hit that 596.5 level. It was a tough battle in that area. If you guys look on the daily chart, around that area is and is where the 50 daily moving averages. I don't always talk about the moving average, but I do watch them, guys. And that was what the significance of the 596.5 level was today. Bouncy. And then what happened? Well, after we broke down the 596.5 level, it looked like it was going to get bearish. Unfortunately for the bears, we had a false breakdown setup with 596.5 recapturing. And then they gave us a bounce towards the end of the day. It was a little bit complicated. The morning was good, but then the afternoon time was a little bit complicating. Although not too surprisingly to see after a big gap down like that. Keep in mind, guys, we also have FOMC in a couple of days. So the moves in the next day or two is going to be a little bit complicating. Not very trustworthy. So as always, as usual, Uncle recommend to play it level to level. All right, guys. But I do want to talk to you guys about something here. We got a bunch of gaps. Gaps are very important. If you're a price action trader, you guys got to learn about trading gaps. From January 13, mid-January, all the way till late January, recently, we had multiple gap ups, runaway gaps, with the bears just getting their butt kicked. Until now, we got ourselves an exhaustion gap, a bearish exhaustion gap. There are different type of exhaustion gaps, but today I want to talk to you guys about the bearish exhaustion gap that you guys are seeing right here. You go to investopedia.com, type in exhaustion gap. They'll talk more about the exhaustion gaps and how to trade it if you guys want to read about it, okay? But I'm going to take the time in my YouTube video to explain to you guys how to trade it as a price action trader, how to trade the exhaustion gap. Now, we're looking at the daily chart. We got some new context. What will keep this exhaustion gap down? What will keep it bearish? It will stay bearish as long as this big old gap does not get filled. We don't even want to see an attempt of it. Okay? We want to see an exhaustion gap and then just give us another gap down. If you're a bear, that's what you want to see. But if you're a bull, you want to see at the very least an attempt to fill the gap. An attempt. Maybe not all the way, maybe only halfway, but to invalidate the bearishness of this gap down, there must be at the very least an attempt. And we know there'll be an attempt when our resistant level of 600 clears tomorrow. You guys see is at 600 right now in the aftermarket, so it doesn't count for me. It has to be above 600 during the trading hours for me to see it as an attempt. You guys get what I'm saying? An attempt. I don't know if it'll succeed, but if we clear 600 tomorrow, there's a good chance we head up higher with 602 in play, and above 602 would definitely be bullish and send us to higher highs. 604, 606, 605.5. The gap's all the way around 608, so we must get above 608 to consider it filled. And the new all-time high is around 610.7-ish. Well, all-time pivot high, I should say. Okay? Above 600 and above 602, the bulls have a shot at a bounce. That's what I'm trying to get at here. Okay? Now, to keep this gap down bearish, we need to see price stay below 600. That was today. We just got shy of that 600 level. We got up to 599.69. But I'm around it to 600. And I'm going to give the bears the benefit of the doubt. That's a long syllable. The benefit of the doubt. I'm going to give it to the bears. If they can keep the price below 600 and break down that darn 50 daily moving average, which is around 596.5. If that scenario happens, guys, that would be very bearish. I would look to short. If we gap down, hey, we just play the next setup with 594, 592 fib level, 590 and 588 all in play to the downside. Okay? Now, in my opinion, I don't think we're going to get a real move until FOMC, which is this Wednesday at 2 o'clock p.m. Eastern Time. Okay? That's in my opinion. So until then, I suggest we just play it level to level. Or if you're not comfortable with it, maybe just stay in cash position until the real move happens this Wednesday. Okay? But if you don't want to wait till Wednesday, like I said, if we clear 600 and 602, bullish. We can get a bounce. Dip buyers are going to get what they want. And maybe we can go for the gap fill. Okay? If we are below 600 and we break down 598 and we break down the 50 daily moving average at 596.5, it's a big, big chance we are heading down lower. Okay, guys? That is my plan for us tomorrow. Let's move on to Triple Q. Triple Q also had a big gap down as well, an exhaustion gap. We don't want to see today's pivot high at 518 clear. All right? If that does happen, then that would be bullish with 519.5, 522, 524 or higher and play the gap fill. Well, price needs to get above 530 to really fill that gap. And it's possible if bulls can clear at least for step one, clear 518. Okay, guys? To keep it bearish, price must stay below 518. So 518 is the equilibrium level. Below 518, I would be bearish. And if we break down 515 and 513.5, I would favor more downside down to 512, 510.5, 509, and all the way down to 507 or lower. Okay, does that make sense, guys? Tesla's been looking bearish. Had a nice little gap down here as well. Okay, if it wants to reverse this and give us a bounce, 400, 42, and 43.7 all must clear. We need that daily chart close. And to really consider the gap filled, price needs to get back to where it was pre-gap, which means price needs to get above 407 for the gap to truly be filled. I don't make the rules. You can check investopedia.com, guys. It'll explain all to you guys in there. All right? But as long as the gap does not get filled, I'm going to once again give the bears the benefit of the doubt. And if support at 396.3 fails, we could definitely go down lower. 395, 393. 390.4 or lower would definitely all be in play. NVDA. Wow. Now that's a gap fill. Now, excuse me. Now that's an exhaustion gap. Or could it be a bearish runaway gap? Okay, because there's different types of gaps. And if this is a bearish one, support levels must fail. We lost the last fib level, critical fib level we lost is at 120.6. Okay, as long as below that, bears have a shot at more downside. 119, 117, 115, and 113.7 are all in play. Okay, trust no bounce unless 120.6 can recapture to put higher targets in play. 123, 125, and 126.8. I'll round it to 127. If we can get up to and clear 127, this could be an attempt to go fill the gap to the upside. It's going to be a lot of work that the bulls need to do. But step one is recapture 120.6 to put those higher targets in play. Because as long as below, bears have a shot at more downside. 119 and 117 fill, like I said. I don't care what the RSI says. We are heading down lower. This is NVDA. IWM rejected from this downtrend line. Bulls try to battle and try to get the breakout, but they fail. Now, if bears want to show some follow through, they need to take out a few levels here. 226.4 is the first level. 225 is the next level. They need to break those levels down to put 222 in play. You guys can see that there is a gap here as well. As price action traders, we must know how to trade gaps. And when we take out the low of January 16th low, because below that low is the attempt that I'm talking about, the attempt to fill the gap. And if there's an attempt to fill the gap, which means price breaking below 222, we could get a lot more bearish, guys, and we could head down a lot lower. All right, my bearishness on IWM will cancel if we can clear this downtrend line. It's a downtrend until it isn't, which means price needs to get above 228 and 230.5. That's the fib level. 230.5, I'll consider it a breakout, and we are heading up higher, and I would be bullish on IWM. Apple. What a bounce. What a bounce, trying to go and attempt to fill the gap. You guys see what I mean? You guys see what I mean? An attempt. This is the attempt that I'm talking about. Apple's already doing it. We have this gap down. This high right here, this pivot high. Let me change the color to green. And then what happened? Apple broke that high and went and it's going for the gap fill. Can it continue tomorrow? If the answer is yes, 230.7 and 232 must clear to put 233.7 or higher in play. Bears don't even want an attempt to fill the gap, because if there's a high probability that the price is going to go higher. Does that make sense? And if we clear those levels tomorrow, Apple's going to continue. If this is a dead cat bounce, support at 228 must fail. And that will put lower targets in play. 226.5, 225, all the way down to 223.5-ish would be in play. Amazon. Crazy gap down, but the dip buyers bought it up. And if they are to continue it tomorrow, next resistance at 236 must clear to put 238 and 240 plus in play. All right. If we are going to get bearish on Amazon, it's not looking bearish right now, guys. But if we are, support levels must fail as usual. 234, 232, and 230 all must fail to put 228, 226, and 224 all in play to the downside. I would be bear bias below 224. Meta, what a bounce. No gap. Well, it did gap down, but the dip buyers bought it up this morning. I have next resistance at 660.7. If that clears, 662, 662, and 663.5 would be in play, and above that I got 666, the devil's number, with 667.6 above. I don't like covering this meta. I don't like covering meta. Anyways, if it is gonna be a pullback, I mean, when's earnings? Holy moly, doing a shot. It's this Wednesday. You gotta be very careful with this one. There's a lot of earnings this week now that I think about it. But I do have support at 659, 657. If those levels fail, 655, 653.5, and 652 will all be in play. Below 652 would be a breakdown of a fib level, and that's when I would favor a deeper pullback. All right. Microsoft got a little gap down. More than a little gap down. That's an exhaustion gap, a bearish one. Now the high, today's high is 435.2. Price is a little above that in the aftermarket. Not a good sign for the bears, okay? If price can stay above today's high tomorrow, if price can stay above today's high, that would be bullish, okay? Next resistance will be at 439.5. Critical resistance, 438 and 439.5. Those levels clear. It's a good chance we pop all the way back up to the mid 440s, 445 or 47. Maybe retest this yellow trend line around 449.5, all right? I would not get bearish unless we could get back below what was today's high? 435.2. Got to get below that number. Break down some support levels. 433. I have a fib level at 429. I need to see those levels break down to get bearish, all right? DXY is looking bearish. Next support's at 107.1. If DXY can break that level down, then there's a good chance SPY is going to go the opposite and pop up higher, okay? To get bullish or put in a bounce, DXY needs to clear 107.5 and 108. And then maybe I would favor some type of bottom is in, all right? Coin. Well, I have a couple of levels, okay? I have a couple of levels to watch out for. 279, 281, and I said a couple, but I meant a few. 282.4, that's a fib level. If we are to get a bounce tomorrow, those levels must recapture. But the main level was today's high at 289.7. If we can get above that, they can be an attempt to go fill the gap. All right, there has to be an attempt here to get bullish, to build some bullish momentum. Otherwise, it's gonna be bearish. With next support, guys, next support is at 277.5. It's actually around there now. Below it, 276 or lower would be in play. We can possibly drop all the way back down to 266-ish if that level can't hold at 277.5 and 276, all right? Can't get bullish unless we recapture 282.4 and take out today's high around 289-ish. Get above 290. Above 290, I would be bullish. DOGE is, looking nasty right now. Next support's at 32 cents and 30 cents. If we break down 30 cents, guys, it's going to get a lot nastier. Trust no bounce unless 34 and 36 cents can recapture to put 38, 40 cents, and 42 cents plus all back in play, all right? I would long above 34 and 36 cents again. Bitcoin. I have a level here at 100.9K and 98.6K. If those levels can fail, break down, Bitcoin can pull back down a lot lower. All right, maybe get back below 100K. Trust no bounce unless 104.2K can clear, right? Above 104.2K, it's a good chance that our bottom is in and we are heading back to all-time highs. All right, guys. Thank you guys so much for being here. Thank you guys so much for watching. I love y'all. Good luck tomorrow. Peace.